For those of you joining us for the first time, welcome to today's edition of Toggle's Daily Video Insights. My name is Jan. I'm one of the co-founders of Toggle. And every market trading morning, we take a look at one of the many insights that Toggle has produced across a range of publicly traded US equities and take a deeper dive just to see what the fundamental price pressures are that the system has been uncovering to give you a more complete picture of what potentially could be going on with a particular stock. Now today the focus is going to be on Royal Dutch Shell, a well-known oil company that a lot of you will be familiar with if for no other reason that you've stopped at their gas station once in a while. What you can see here is that actually we've had quite a confusing picture. There have been a lot of really conflicting insights. There have been earnings that have been pointing to downside potential for the stock, but then analyst revisions have gotten bearish enough where historically this has actually meant that the stock was probably near or at the lows. And so we're going to look at one of those instances today, in particular the latest analysis that Toggle produced is exactly highlighting something similar. So if we click on that card, you'll see that the analyst revisions for Shell are coming down. Take a look at why it might move. It tells us exactly what's going on, and you can see that actually the dividend per share is now being downgraded. And historically, when that has happened, as you can see in a number of previous occasions, this was actually the point to not get out but get into the stock. In fact, except for a couple of periods of consolidation, it usually coincided with pretty strong price action for this particular stock. Now, what could that possibly mean? Based on the 11 occasions that Toggle was able to analyze with a starting price of $15.84, a gain of just over 10%, which is what historically seems to have been the case, would end up around $17.44. Now, as you can see here, although this is in principle a several month pattern, it could happen quite quickly. In fact, in just over a month, you could see this kind of price move. So there's definitely quite a bit of upside potential relatively soon. Now, at the same time, you really want to be careful of crossing outside of the confidence interval and below this red line, where the odds of this still being a relevant driver and potentially people much more focused on the earnings growth is effectively suggesting that the price could go down quite a bit more. Now, past performance will actually answer that question for us, and we can see what is the risk in this particular trade. So, put differently, in the past episodes, what did the upside look like versus when it didn't work and the stock continued going down? As you can see, the risk really does appear to be quite one-sided here, because the gains many times were quite a bit larger than 10%. In fact, in some cases, just a shade of under 20%, whereas on the downside, they were really concentrated much near zero. And so a dollar invested and reinvested in each of these episodes would have actually netted you almost $2.50 of pure profit. So again, it's a reasonably compelling trade. The problem, of course, is that there are a lot of forces that are pulling it in opposite directions. And so we really need to have a think about how it fits in your portfolio and be very, very stringent about your stop loss levels. So much for Royal Dutch Shell today in the daily brief, which by now should already be in your boxes if you subscribe. And if you don't, you can do so at toggle.global. We also discussed the Dogecoin and what that might look like over the next days. Thanks for your attention, and we'll see you again tomorrow.